Good morning, Friday, June 30, 2023. Let's see where we are, 2:28 a.m. Almost my time to see a trade setup, but let's go to the day and see where we are after yesterday's price action. Remove all of this junk off of the screen. We'll work with clean. Okay. So here we are. Today is our and it's Friday, June 30, 2023. Look down here where the purple circle is, and I hit Friday, June 30. So that's what candle has been formed so far since midnight, 2.5 hours ago. And this is Thursday, June 29. And that's Wednesday, Tuesday, Monday. Price has been going up since Tuesday. So if you recall in Tuesday or Wednesday's video, this is the day imbalance, the skinny box referred to in the previous videos as the day imbalance, bearish fair value gap. We said price wanted to go up into, see how it reacts to come down, and look at where price is. Trading into that day fair value gap. Or imbalance, same thing. So as we can see, it did trade up into it, and we put a square around it to extend it. It did trade up into that rectangle, and price reacted and moved down. But it's only 2 hours into the day, so let's see what price wants to do. What I've done here is, let me turn on temporary. Oh, come on. Temporary. 1, 2, 3. Okay. So what we've done is put a fib tool on the day range, which is the current high and the current low of the day range. So this is the current high on the daily chart, which was established on June 16, 2023, Friday, week before last. Last week, Friday. And the low, which is Monday gone, to Monday, June 26. The halfway point, which is equilibrium, like we say, because price wants to balance, is here. Ooh, wow. Wow. This is crazy. So remember, we were watching price to go up to equilibrium of the day range and into this daily bearish imbalance, fair value gap. Exactly what it did. But when we put the fib, now what does it want to do? Come back down to equilibrium, maybe, or it could continue to OTE. So again, this is why we watch price, because we see where price is likely to go and what makes sense according to the algo. So let's see here. I'm looking at price 2. 1, 2, 3, 4. 1. Okay. Let's see. Previous day range. Let's look at these 3 lines on the day. OTE. That's something totally different again. But we'll get into it. That's another key level that we look at. Price may want to go up as high as 44, 46.50 before it turns around, which is the halfway point between this box as well. which is the fair value gap. Because price likes balance. It's an algorithm. It's perfect. It goes from equilibrium to equilibrium. It's what it does. Uh, and then what we want to look at, if it decides to go lower today, is the previous day range, which is the halfway. Previous day was yesterday, June 29. Again, look down here by the purple box. June 29, so that this whole candle represents yesterday's price action. So when you put a fib tool on that and you look for the middle point, 0.5, that gives you this line. So price is coming down. It will want to come down to this previous day range equilibrium at least. So we want to watch two things. Does price continue up into this imbalance to OTE, or will it continue to come down and hit equilibrium of the previous day's price range? We want to watch that. Okay, let's go down to 4 hour. See where price is right now on the 4 hour. So price is between OTE. See, it traded up into this red box. This is the red box from the day chart, which means price, and it's bearish. It's fair value gap. So price trades up into it, and it's doing exactly what we expected it to do, reacting by pushing it down. So it could come down, like we said, to the previous day range, but we want to see how it acts to this day range equilibrium, or it could turn around and continue higher, at least to this consequent encroachment of the fair value gap, or slightly lower, or OTE. Let me put it here. Let me put it here. Okay. Yeah, we'll put it around. That just makes sense to put it there. So we're watching this white line to see if it wants to go there and then come down. We're watching these two yellow lines, how it reacts to this. But if it gets here, I have a feeling even if it does temporarily bounce, it'll come back down to this previous day, which is yesterday's equilibrium, which price likes to do, and then turn around. So let's see the 90-minute. Now, the thing is, this is the manipulation hour. So it has taken out Asia high so far, reacted by coming down. It may close. It's 23 minutes left, 23 and a half minutes left in this 90-minute candle. Close lower. Then that means it will continue a little lower. So my eyes are really towards these two yellow lines. That's what I'm looking at today, to see how it reacts to these two the day equilibrium range, 50% of the day range, and 50% of yesterday's range. So let me turn on a few things here. Yesterday's range. So let's look at yesterday's price. Nothing else. Okay. So as we can see here, wow, really? Okay. Really? Okay, it's Thursday's high, Thursday's low. Thursday, as you can see here, to Friday, midnight Thursday, midnight Friday. All of this is Thursday's price action. The lowest price traded on Thursday, 4409.75, and the lowest price traded highest is 4442.50. And if we put a fib on the low to the high, we get this line that says previous day range equilibrium at 0.5. Price will want to come back down to the balance. Okay, so that's where we are. Pre-stay price range. So let's go down to the 5-minute now. Let me turn on a lot of stuff here. Timelines. Yep, a lot of stuff. So remember, here's my box. Okay. Okay. Back to the 5-minute. Okay, let's put our Asia. What I have not done is put my Asia range box up so that we can identify Asia levels. So let's do that first of all. So that's important. London range reacts to Asia range. New York range reacts to London range. I can't even see it right now. Asia session. So the low on Asia session is here at 44.33, identifying Asia low. And this is Asia high. Asia high and Thursday's high is the same. Is that so? It is not. We'll do something like brick. Rebalance Thursday. I shall leave it. Okay, as we can see, prices already taken out. Asia on Thursday. Right here. Broke it at 21.29.10. Sorry, 21.10.910. It went up, created a new high. During Asia session, it's just Asia high. And then at 1:30, it broke Asia high, came back, closed within the range to come down. So what I see here is price wants to go lower because it came up and it tested the old high that it broke, bounced off this way. And let's see what it wants to do from here. Thursday. Let's go down to the 2-minute. Go to the 5-minute. Yeah, let me see something here. I won't mark anything yet. I shall wait. 44, 37, 25. 44, 37, 25. A minute. Just marking up some key areas that we have to watch. That I would like to watch actually. What did we have here? I would like to watch to see how price responds to it. Okay, let's go back down to the 5. Okay, so price is between Thursday's broken high. Thursday's broken high, yeah. You can see this is Tuesday's high, yesterday's high. It went up and it broke it, came back, tested it, bounced off of it. Now it's coming back to the equilibrium of a 15-minute order block. Let's see how it responds to that. Because this is a bullish order block on the 15-minute. I don't think you can see it, but it's the order block here. Order block here. It's halfway down. So this is a bullish order block, which means price usually comes down to it, reacts by bouncing off and going up. Halfway mark. Let's see what it's going to do. If it's going to continue beyond this blue line, this gray line is the bottom of the order block. So if it comes down to this gray line and totally disrespects the close below it, price will continue a bit lower. But usually what it does is it'll come down to the bottom of the order block, retrace slightly, as in go up, and then come back down into this 5-minute order block, retrace slightly, and then come back down until it hits these equilibriums. So even if it does come down, retrace, come down, retrace, come down, retrace, down, up, down, up, down, up, till it hits this. I want to see how it reacts to this day range. I really think it's shooting for this previous day range. And then what it usually does is it'll hit one of these and then go all the way back up and then come back down again. So let's see what it does. Let's watch it on the 2-minute. As we can see, it's reacting to the middle of this order block. Came down and touched it at 222 initially. Pulled back, closed above it. Next candle did the same thing. We got a slight retrace into a bearish imbalance fair value gap. Traded up into that red box, came back down, closed lower, and as you can see, it continued lower until it came back to the equilibrium of that order block. Now it's bouncing back up. So let's see how it just closed. Okay, let's watch price. Look at the treasury bonds, see what it did. I look at this because this gives me confluence in that if this is trading up, I look at S&P 500 to see if it's trading down because that's the relationship it has. It's the opposite, which is called divergence in trading. So let's see. As we can see, yesterday it traded down, and yesterday the S&P 500 traded up. So they're the opposite. Usually if I can't see something on the S&P 500, I come to this, I see which direction this is going in, then I know what direction the S&P should go in. So that's a good practice for when you learn to trade. Get instruments that go in the opposite direction and you'll have an idea of what's going on. Manipulation. Now what I don't like is I see this is where, oh, it didn't take it out. It took that out. Should come down. Took this out. Should come up. So let me watch. I don't see anything clear right now. So I want to watch these two levels because on the Treasury bond so far, 90-minute, I just taken out the lows. Looks like it wants to. Let's watch these levels. Let's see where this 90-minute candle closes on the Treasury bond. That'll tell us a lot. If it closes higher than this blue line, it wants to go up. Price will turn around and go up a little, probably come up and take out these highs. Well, not probably, it will. Chances are high probability that it will, because this is a manipulation candle. Oh boy, it opened, took out the high, came back down, took out the low. This may continue lower. Okay, let's keep an eye on that. Let me see what this did on the 90-minute. And up and took out the high. Come right down. Close lower. Okay. So we're still watching this blue line, which is equilibrium of the 15-minute order block. Could push price a little higher into this 2-minute order block. Let me see if there's one on the 5. No. One on the 15. No. So there's just one on the 2-minute. Let's watch this and see what it does. If it comes up that high, move it. Let me turn off some of this stuff. It's too fussy for me. Probably won't turn anything on. Let's just watch price. It hit the midnight open and bounced back severely. So we took out these lows, short-term lows, and put reacted. So let me put a line here to show us what it did. You see what it does. Closes above or below this blue line. If it closes above it, it'll indicate higher prices, which means it probably wants to go to the equilibrium of this range. But let's see. It's a whole minute left in this candle. Equilibrium. Didn't break the low. So I don't see it wanting to take out a high yet. So it probably will not close below this because it wants to come down a little lower. But let's see. Yeah. 20 seconds left. Now it looks like it's going to close higher than these lows, but it's 2 seconds. One closed at the midnight line. I went down to the 2 minute from the 5 minute. I suspect it's going to come up to this green line. We have to see if it's going to break through it and come back down. But I'm thinking it may want to come up into this. I'm thinking it may not even move that much. But that's what it looks like it could do. High probability. Let's see what price does. Okay, see price reacted to this 15-minute order block low. Rejected and going up. Let's see if it's going to form this fair value gap because it pushed well below the midnight open and closed below it. Took out highs here. Highs here. Sorry, low, low, low. Let's see what it wants to do. See how fast it's moving towards these equilibrium down here. Price love to do that, but let's see. Still reacting to this 15-minute order block, which is a bullish order block, which wants to push price higher. So may go higher temporarily and then come back down or one straight line. Let's see what the algo is programmed to do. It closed higher. This is a bullish bearish imbalance, which means price could trade up into this to come back down, or it could leave it open. Let's see where it closes in relation to this gray line. A little higher, so it could retrace. Into this. Retrace, pull back, go higher to come lower. Could. Looks like it wants to go a little higher, yes.
Order filled.
Let's see how price reacts to this. We'd like to see it come down and close below it.
Order filled.
Connecting to the paper trade account. Let's reset this to 25,000. 25,000 is the amount in the account. Let's watch high prices. So far, it's still disrespecting. Oh, respecting it. It hit the midnight open and it's pulling back, but it's still over a minute left in this candle. So let's see if it closes lower or goes up, closes higher. It's reacting off of this order block. I don't like it. It's between them. Okay, let's see. Where does it want to go? What is the high of Thursday? 37, 39. Wants to come here. It's a good sign. Wants to go higher. So let's see. I just took these relative equal highs. Let me put a line. Just put these relative equal highs. Put a little of this range. It's inside that order block. Low, high, low, low, higher, low, high. It's also a breaker. It's powerful. Okay, so it took out these highs, came down and closed lower. Let's see how it reacts to this green rectangle, which is a bullish PDOA. Could trade down into this and go up, or just totally disrespect it. Let's see how it reacts to it. Let's see how this looks on the file. They wanted to come up and break these relative equal highs. So let's see where price wants to go. These are relative equal lows. Well, these are actually equal lows. Let's see how it reacts to that. Asia low is the target. It's creating a bearish fair value gap right here, this red rectangle. Could be closing it in, but let's see. Oh, there's some dirty price action. Dirty. Low probability. Setting up something though, we have to watch. Looks like price wants to go higher. I don't like that it didn't take out these equal lows. I would have preferred that it took them out. So it have no reason to come back if it's going higher. It's going up, down, up, down, up, down, up between these two price ranges. A little bit of a consolidation going on here. So let me see something. If it's a little bit of a consolidation, it's coming down. Could be coming down to this range. Let's see how price treats this if it comes down this low. Needed to break out of this though. Either break out or break out. So it could give us an idea of which direction it wants to go to. You see these nice juicy down candles. Look at that juicy up candle. So we need to see what it's doing. It's being quite elusive right now. So we sit and we watch and we wait to see what price is showing us. Sloppy. Created another equal high. No breakouts yet, so we will watch. It's just bouncing, consolidating, bouncing, bouncing. We needed to get out of the bounce. Yeah. Let's see what it looks on 5 minute. What is the 5 minute telling us? Same thing. Consolidation, straight line. Hope this low. Trade above it. It really should have been moving like that if it wanted to go higher because it already came down and took out a short-term low. Took out Asia's high and Thursday's high already. You could see a sharp decline because it came down and closed back within the range, so a sharp decline. So we don't want to do anything until it either goes back up to Asia high or to reach a new high set, which is this green line, or it comes down to just Asia low. Nothing until then. Guesswork until then. Yeah, I see it's consolidating now towards the high of this range. I don't know if it's going to break out into this bearish order block for price to get pushed down to go lower, because it's consolidating towards the top of the price range now. See this yellow line? Bottom half, top half. And it's in the top half, which is premium. Premium discount, premium discount, premium discount. Remember?